Welcome to the fascinating world of financial markets, a realm where fortunes are made and sometimes lost. In this vibrant ecosystem, two elements stand out: stock markets and cryptocurrencies. Stock markets, the traditional avenue of investment, and cryptocurrencies, the new age digital assets. Both hold the allure of substantial returns, but are not without their share of risks. Remember, we are not financial advisors. Always do your own research before making any investment decisions. Let's dive into the traditional side of the financial markets first, the stock market. Picture a bustling marketplace. Now replace the fruits and vegetables with shares in companies. That, in essence, is what the stock market is, a place where buyers and sellers trade ownership in companies. But why do companies sell their shares? Well, it's a way for them to raise capital. Instead of taking on debt, companies can sell a piece of their business to investors. These pieces of ownership are what we call stocks or shares. When you buy a share, you're essentially buying a small piece of that company. You become a shareholder, and that comes with certain rights. For instance, some companies pay dividends, which is a way of sharing their profits with their shareholders. So, if the company does well, you, as a shareholder, stand to benefit. But dividends aren't the only way investors can make money on the stock market. There's also something called capital gains. This is where the buy low, sell high strategy comes into play. If you buy a share at a certain price and the company's value goes up, then the value of your share goes up too. If you sell your share at this higher price, you'll make a profit. This is known as a capital gain. Of course, it's not always that simple. The value of shares can go down as well as up, depending on a whole range of factors. Everything from the overall health of the economy to the performance of the individual company. That's why investing in the stock market can be risky. But here's the thing about the stock market. It's not just for the Wall Street whizzes. With the rise of online trading platforms, anyone can get involved. You don't need to be a millionaire to invest, you just need to be willing to take on some risk and do your homework. So that's the basic idea of the stock market. It's all about buying and selling shares in companies with the hope of making a profit. Now onto a newer and more volatile part of the financial markets: cryptocurrencies. Cryptocurrencies are digital or virtual currencies that use cryptography for security. They are internet-based mediums of exchange which use cryptographic functions to conduct financial transactions. The most well-known cryptocurrency is Bitcoin, but there are thousands of others, each with their own unique features and uses. At the heart of cryptocurrencies is a technology called blockchain. A blockchain is a decentralized technology spread across many computers that manage and record transactions. It's secure, transparent, and free from control of any central authority. In other words, it's a public ledger of all transactions that have ever happened in a particular cryptocurrency. Now, you might be wondering, how are these cryptocurrencies created? They're mined. Mining is the process of validating transactions on a cryptocurrency's network and adding them to the blockchain. Miners use powerful computers to solve complex mathematical problems, and in return, they're rewarded with a certain amount of cryptocurrency. But what can you do with cryptocurrencies? Well, you can use them for transactions, just like traditional money. More and more businesses are starting to accept cryptocurrencies as a form of payment. You can also hold on to them as an investment, hoping that their value will go up over time. However, it's important to note that cryptocurrencies are very volatile. Their value can skyrocket in a short amount of time, but it can also plummet just as quickly. This volatility can lead to high returns, but it also means there's a high risk. You could lose a significant portion, or even all, of your investment. Cryptocurrencies are a revolutionary new form of currency, but they're not without their risks. As with any investment, it's crucial to do your own research and understand what you're getting into. It's not a get-rich-quick scheme, and it's definitely not for the faint-hearted. But for those who are willing to take the risk, and who understand the technology, it could be a worthwhile venture. Cryptocurrencies are a revolutionary new form of currency, but they're not without their risks. As with any investment, it's crucial to do your own research and understand what you're getting into. With a basic understanding of both stock markets and cryptocurrencies, let's examine the key similarities and differences. When we look at risk, both stock markets and cryptocurrencies are inherently risky, but in different ways. Stock markets can be influenced by a multitude of factors such as economic indicators, corporate earnings, and geopolitical events. On the other hand, cryptocurrencies, being relatively new, are highly volatile. Their value can swing wildly based on market sentiment, technological developments, and regulatory news. In terms of potential returns, both stock markets and cryptocurrencies offer opportunities for significant gains. However, the potential for high returns often comes with high risk. While stocks have historically provided steady long-term returns, cryptocurrencies have shown the ability to deliver astronomical returns in a very short period. But remember, the reverse can also hold true. Speaking of liquidity, stocks, especially those of large corporations, tend to be highly liquid, meaning they can be bought or sold easily without significantly impacting the price. Cryptocurrencies, however, can be less liquid, especially for less popular tokens. This could make it harder to buy or sell without affecting the market price. Now let's talk about regulatory oversight. Stock markets have been around for centuries and are heavily regulated by governmental bodies to protect investors. Cryptocurrencies, on the other hand, operate in a relatively unregulated environment. While this can lead to greater opportunities, it also means greater risks as scams and market manipulation can be more prevalent. Despite these differences, both stocks and cryptocurrencies can play a role in a balanced investment portfolio. Stocks tend to provide steady growth and dividends, while cryptocurrencies offer the potential for rapid, although risky, returns. Whether you choose to invest in stocks, cryptocurrencies, or both, it's important to understand what you're investing in and the risks involved. Remember, we are not financial advisors and you have to do your own research. So we've delved into the basics of stock markets and cryptocurrencies. Let's recap. We started our journey by unraveling the intriguing world of financial markets. We learned that stock markets are essentially spaces where buyers and sellers trade shares of public companies. We understood how prices fluctuate based on supply and demand, the importance of market capitalization, and the diverse range of investment strategies one can adopt. Then, we ventured into the realm of cryptocurrencies, a relatively new player on the financial field. We discovered that these digital assets leverage blockchain technology to ensure transparency, security, and decentralization. We discussed how crypto transactions work, the role of miners, and the significance of keys in maintaining crypto security. In comparing the two, we observed how both stock markets and cryptocurrencies are investment avenues, with the potential for high returns. Yet they differ in terms of regulation, volatility, and market hours. While stock markets are heavily regulated and operate within set hours, cryptocurrencies are largely unregulated, highly volatile, and trade 24/7. As we wrap up this exploration, it's crucial to remember that the world of finance is complex and ever-changing. This guide is just the tip of the iceberg. Thanks for joining us on this journey through the basics of stock markets and cryptocurrencies. Remember, always do your own research and make informed decisions. Don't forget to like, comment, and subscribe, and hit the bell notifications so you'll get updates anytime we upload a new video.